probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right. Well, now we're playing with the house's money, and I bet a lot of you watched the pre-markets this morning, going, "Oh my gosh, the tariffs are going to kill us," and the market is crashing. You know, the Feds won't cut the rates. Tariffs are hitting. What should I be freaked out about? What's going on with this market? That's a great question. You know, so but if you're like most traders, you see the headlines and feel that pit in your stomach kind of, going, your pucker factor takes over and you're going, is my money safe? What if this market, never recovers? I know I've had that thought. Oh, it's never going to come back. But wait, there is a better way. What if I told you that we've been here before? And again and again and again, every time the market tells us the same story. Today, we're going to be basically going to reveal whether any of this actually matters to your trading. Does it really matter? So you stop making those, so you'll stop making the same mistakes. Plus, stick around because later in the episode, I'm going to reveal a breakdown of some crucial steps in technical analysis that'll help you to become a better technical analyst and also point out where to take the important actions to buy and sell.
Yes, so today we're pulling back the curtain on two things that seem to shake the market every time. The Fed's interest rates, decisions and tariffs. And the big question is, do they really move the market long-term, or is it just a whole bunch of noise? We'll look at real examples, times the Fed cut rates, times they raised them, times tariffs scared traders out of the market, and times they made stocks soar. The patterns might really shock you. So, plus we're going to give you the 4 crucial steps to become an expert technical analyst, because if you know how to read a chart, then you really don't need to panic. You'll know exactly what to do. So if you've ever found yourself stuck in a cycle of fear, glued to the news, wondering if you should buy or sell or just run out the door, then this episode is going to be for you.
Right on, Mike. And so, hey, everybody, welcome to Trading Truths. If this is your first time, let us know where you're from and just drop a note down in the chat box. We'd really appreciate that. And remember, if you have any questions of Mike and I, put that down in the chat box also, because we want to help debunk the lies you may be believing about the market. I'm Dennis Wilborn, founder of Autopilot Trading, and where we teach traders how to trade smarter, but not harder. We clarify and simplify the approach so you can multiply your account. And then Mike, he's been doing this a long time. Mike, tell us what you do with Mara Wealth.
Yes, thanks a lot, Dennis. So I'm Mike Lamothe, founder of Mara Wealth. I've spent 25 years helping traders build the right mindsets and strategies. If you've ever felt like the market is going against you, like no matter what you do, you just can't win, trust me, I've been there. And what we do over at Mara Wealth, we're here to help.
Right on. It's one of those things, Mike, it's really interesting is, I like to tell people that you're the mindset guy and I'm the mechanics guy, with the structure of the trading systems and all that kind of stuff. And we make a really great team. So if you want to hear more of us, or do us a favor, can you guys do something for us? Let other traders know that Mike and I are on every Monday at noon time Eastern. And we'll spend an hour covering, the myths of the market. It's in debunking them. And then occasionally we have some really great guests coming on board. Who's our next guest, Mike? We'll just let that out of the bag right now.
Yeah, Christian Flanders. Who won second place in the U.S. Investing Championship last year with a return of over 400%.
Whoa, yeah. That's awesome. And then
he has a lot of interesting myths that he wants to come on here and debunk and bust. So looking forward to that.
So yeah, and we always love to have the guests, but between Mike and I, we've got close to 60 years worth of experience in the market. And then after Kristen comes on, we're going to have Kathy Connolly, who's going to be
Mhm.
coming on, and she is absolutely amazing. If you're an Investor Business Daily person, Kathy's really cool. And so together, we're here to help you cut through the noise because the noise of the narrative can actually scare the heck out of you and result in you running around with just FOMO all over your place. And, FOMO on your face is not a good place to have it. So, Mike, what do you think about, let's jump in. We've had the Fed coming out and saying, well, we're going to slow down, not going to raise rate or lower rates and all that kind of stuff. And so the market
Right.
kind of reacted that last week. And then what was it? Thursday, Saturday, or Friday, or even Saturday? No, Friday. Last part of last week, they
Mhm.
came out and said, "Okay, President Trump is going to put the new tariffs in place on Mexico and also on Canada." And so, kind of crazy, but
Mhm.
he's acting a little bit like Teddy Roosevelt. He's kind of like
Yeah, yeah, absolutely.
carrying a big stick.
Yeah, that's right.
And it's called tariffs. And so even if you notice how the market freaks out when the Fed talks, we're going to cover the Fed first, but then a few weeks later, it's like nothing happened. So
Yeah.
let's talk about rate cuts because
Yeah,
you're the one who brought up the issue of rate cuts and tariffs.
right. So the question that I had is, does this stuff really matter, right? Or is it even the right kind of question to ask? Because one of the things that I saw on social media, the people are trying to figure out, well, why is the market moving this way? And there's never any shortage of answers to that question. Well, why is the market moving this way? Why is the
Yeah.
market doing that way? Uh, I think a better question to ask is, no, what should we do? Or
That's
how
good.
how should we respond?
Yeah.
And the way that we're going to arrive at that answer is by focusing on process.
Yeah.
Because if we're asking ourselves what should we do, then well, refer back to your plan, refer back to your process, and then that's when all this becomes very, very easy.
Yeah. Yeah. It's funny you
Or
say
at the
that.
very least, clear.
What's that?
At the very least, I'd say clear, if not easy. Certainly
Oh yeah,
clear.
oh yeah. No, it's not necessarily because sometimes it's sticking by your guns without compromise can, be a challenge for all traders because one, we want to be in the action. We want to have confidence that we're making the right decisions and we want a consistency in our returns. And so when the unknown crops up, like the
Mhm.
Fed rates, the
Right.
unknown of what's going on there, that can drive us, a little bit insane. I think and then we start making emotional decisions. And I
Mhm.
know I've talked about it before. Here is when our emotions go up, our IQ goes down,
Mhm.
and we're resulting in dumb decision. But you hit something I absolutely love. You said we ask we're asking the wrong questions. And we hit upon that a little bit last week, but you said we're asking the why questions where we should be asking the what questions. And I agree with that wholeheartedly because
Mhm.
why is more results based, or I'd have to say, let's take it a step further. I think why is what people who are victims like to, why is this happening to me? Like
Mhm.
what and so they had kind of uh, a victim's mentality. But if they start asking, just going instead of saying why, saying this happened, now what do I do? Or better yet, if this happens, what can I do? And that way, that sets their plan in motion, right?
Well, sure. So if you're asking, well, what should you do, that and you have a reasonable answer to that question. So presuming that you have some sort of a process, that you have some sort of a plan, that you have some sort of a strategy that's been battle
Mhm.
tested, that you're
Right.
not just flying by the seat of your pants, then okay, I see the market's opening down. Well, do I have a plan for my open trades? Yes, I do. If prices hold this level,
Right.
then I'll hold on to the positions. If it falls below it, then I'm cutting the loss short, because the only way to prevent a big loss is by taking a small loss.
Yeah. Wait, one of the other things is as far as this rate thing goes, uh, I mean, we kind of knew that the economy's inflation still up a little bit,
Mm,
and driving higher, and so the Fed doesn't like to necessarily lower rates
mhm,
when inflation is high because lowering rates can actually stimulate inflation, if you will. And we'll be talking about the tariffs here shortly. And the tariffs can also potentially,
right.
stimulate inflation. The deal about it is that with uh, the preparation for the big drop in the market today, at least for me, and I know it was probably for you too, Mike, actually took place back in December. I was already my positions were already being trimmed where I had
Right.
limited exposure. And let me tell you, when if your exposure is like 50 or 60 or 70 or even 100%,
Right.
well, man, I tell you, when you heard the news that this is what's going to happen and you see the future starting to fall from the sky like they did over this weekend
Mhm.
leading in today, yeah, there's reason to be concerned, and I can see the fear kicking in. And why? Because the person's plan was not adjustable enough to make sure that as the economy softened, the market softened, that their plan would take them out of position. And so I ended up the end of December, I was like, I think 14%, 15% invested. And I did build it up in January a little bit. Got to the end of January and was sitting about 23% invested. But
Mhm.
I'm sitting on just a buttload of cash, ready to rock and roll with the market once it stiffens and once it basically gets over all the noise of the narrative. So how did
Yeah. Yeah, same
so
here. So how do you determine when the market is ready to finally firm up? How do you so are you tuning in to NBC and Fox Business waiting for the latest news to come out? Are you,
you know
waiting for the Fed rates? Are you watching Trump's tweets? What are you doing to see
Yeah,
if the market?
well, that's exactly what I'm doing, and I put them all in a spreadsheet, and I well, that's a pro, that's a con, and no, I don't do that at all. I basically I'm a technical analyst, and
Right.
I one is the charts reveal to me all I need to know because while they don't necessarily answer the question why, they're not
Mhm.
supposed to. What they do help answer is the what. And
Mhm.
also the when, and
Mhm.
that something is happening, and all I have to be able to do is pick out what I call the high probability zones on that chart. We're going to be covering that a little bit later today,
Right,
but
right.
I have to just know how to pick out those. Now, some of the homework I do is I make sure that what I'm planning on trading is strong and hopefully stronger than the market, than the regular market. Uh, or I'll limit myself to leverage ETFs. And I
Mhm.
only have like 7 of them.
Okay.
And it keeps me focused. And so I'm focused on the process and not the noise. And then it's just a matter of waiting because the process results in telling me when to take action. So and also when not to take action. And sometimes that is and a long time ago, one of my mentors told me that, to remember that you don't have to be invested all the time and that cash is a position.
Yeah, totally agree with that. I'm very similar. Earlier today, I actually saw a tweet from Mike Webster that I think
Yeah.
falls right into what we're talking about here. And
Yeah.
the tweet that
What did Webby had to say?
Webby actually shared something from Josh Weitzkin. Do you know who that is?
I do.
He's a chess grandmaster, and he's also has got himself involved in markets. And he was saying that, well, one of the things that helps him is this philosophy of MIQ. It's helped him in chess. It's helped him in trading. It's helped. It's widely applicable. And he had this conversation with Dr. Huberman.
Okay.
So MIQ, what's that? The most important question. What's the most important question that we need to ask ourselves? So, well, when it comes to trading, I'm trying to ask myself, well, what does my process tell me to do here? What does my plan tell me to do here?
Yeah. Yeah.
And it's through that kind of focus that you're able to get better outcomes. When he was part of the conversation was he was comparing how a chess master operates versus how a regular person playing chess operates. And most people think that, oh, when you're a chess master, you need to be thinking 50 moves ahead and be able to plan for all these things. And he's actually like, no, that's not really the case at all. Because if you are trying to think that far out, one or two moves after, everything that you just thought of is completely invalidated. So
Yeah.
it's not about having all the information. It's about being able to point yourself in the right direction.
Yeah. So it's like, so what he's saying is a lot like the grandmaster chess champion Mike Tyson says, right?
What's that?
Mike Tyson says that you can plan a fight the best you possibly can and train for it, but all your planning, all your objectives go out the window as soon as you step in the ring and get hit in the mouth.
Well, sort of. So
Okay.
it's not where you don't have a plan, but you want to have a narrow focus. So if it would be like, what would you say Tyson's style of boxing was?
Search and destroy. No. I mean, he was a brawler. I mean, he was a brawler.
Right. A little bit opposite than what Muhammad Ali was, right?
Exactly. Yeah. Yeah.
So it's not where Mike Tyson would be trying to fight Muhammad Ali's style. Having one style, one kind of focus is what worked for Tyson. It also worked for Ali. Having one type of trading style is what works for you. It's also what works for me.
Right.
We have a narrow set of focus and what we're going to focus on, and anything outside of that is noise. When we start introducing random data sets into that, what's if we want to follow what the Trump tariffs and trying to do forecasts and all that things, like if that's actually part of our process, wonderful. If it's not, then it's noise.
Exactly. Yes, I agree wholeheartedly. Now, some of the stuff that like the Fed rates and the tariffs, I mean, I think it's important to be aware of, but recognize that ultimately the decision making process comes down, at least for me, comes down to price action. That is
Right.
my decision making process. And you can go, one of my most favorite charts in the the IBD's book, Trading Stocks, is the chart from 1880s for Tennessee iron and coal.
Okay.
And it shows the patterns are as similar, over 100 years ago in the charts as they are today, which tells you that the human beings who are trading that particular entity are basically, we haven't changed. There it is. I mean, yeah, there it is. I mean, look at that. Just all those, ebbs and flows in the market, and all of a sudden, pow, it took off. And if I remember correctly, in a little bit less than a year, Mike, if you can check the chart for me, I think it went up over 300% or something like that.
It sure did. Yeah, from the correct buy point in 1898, it ran from about $30 a share up to $120 a share in 99. So it broke out in 1898, and by 1899, from $30 to 120.
Yeah, so that's what's it? That's close to
400%.
that's close to 400%. And so you know what? Take a look at other charts. Take a look at Tesla. Take a look at Nvidia. Take a look at uh, uh, Coinbase and all that kind of stuff. The stocks are still doing the same thing, and the patterns on the charts still reflect the same thing. The driving, the driving force, the fear, the greed, and the personality of the people and the psychology of the people who are trading that entity. And it's really crazy, but it just works out that way.
Hmm.
So, but and you may be wondering, you guys, everybody out there may be wondering, is um, you know, as we, so many traders hang on every word the Fed says, and and fear takes over, and well, what do we do now? But what does history really tell us about that? I took a look over the 30 years of history. And so rate hikes took place in 2004 through 2006, and then
Okay.
2015 to 2018. Did the market crash? And so no, the S&P continued to rise during those both periods despite the rate hikes until we hit the crash of 2008. Wasn't due to rate hikes, it was due to just the financial crisis wasn't due to rate hikes. It was due to, I think, poor government policy that let too many people buy houses who shouldn't have been buying the houses. And it just
Mhm.
impacted a lot of different things. And what about rate cuts, Mike? You know, do rate cuts, kill the market?
No, most of the time rate cuts lead to rallies.
Yeah. And so, yeah, because back in the 2001, 2008, 2020, the dot-com bubble kept the market weak until 2003. And so, but that didn't wreck the market. And then 2008, the financial crisis continued despite
Mhm.
rate cuts. But in 2020, after some sharp drop, the market rebounded really, really strong in 2020. So the key thing I think to take away from this is that the market moves in cycles.
Mhm.
And I would almost say that while like the economy and the market moves in cycles, and I think that's more like a wave in the ocean.
Okay.
And the Fed and tariffs is maybe like a little guy on a boogie board out there. You know, does he impact the waves? Yeah, maybe a little bit, but long term, the wave's going to be the wave is going to be the wave.
Mhm.
That's 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 where I think is what's going on there. And I like I said, I think it's any if a person is trading a really strong system, they don't have to be concerned about it because they know their system is going to take care of them. And so what's your thoughts on that? Will it? Will it?
If it weren't for this show, if it weren't for social media, if it weren't for being involved with this kind of stuff, like I probably wouldn't even know that there were all these things going on.
Yeah. Okay.
Because well, what I'm focused on is uh, the major indexes. Right, I'm focused on how they're moving across time frames. I'm focused on stocks that are passing my screens. I'm
Right.
focused on the how they're setting up, and
Okay.
are they setting up in a pattern that I'm interested in? And when all those things happen, how are the trades that I'm taking performing? Are they doing well or are they not doing well? And it's within those three modalities that I'm able to figure out, should I be aggressive or not. So it's really taking out all the noise. So it's not that those things aren't affecting the market in some way, but it's not affecting how I'm going to respond, because
Yeah.
I'm going to see how the market's going to respond by what it's actually doing, by the technical analysis that you mentioned earlier.
Yeah, exactly. So, one of the I heard a really good piece of advice this week as I was listening to the audio book on Atomic Habits by James Clear. We spoke a little bit
Right.
about that last week. And he says that if you are impacted, if a person is impacted by the noise of the narrative,
Hmm.
and the notifications on your smartphone that pop up and ring and all that kind of stuff, they can be really quite disruptive, especially during the morning time, because it seems like that's where the majority of activity. And he makes a huge suggestion: is take your smartphone and either lock it in the drawer or leave it out of the room where you're doing your productive work. Leave it out of the room where you're doing your if you're in the market, so that you're not being challenged with that. And so I thinking that is a really good idea. I know I've turned my alerts off. I turn my notifications off. Now I'll leave my alerts on, but I only have
Hmm.
alerts on, like this week, I only have alerts going on 5, 7, 12 alerts. I have 12 alerts. That's it. And that's for the 7 ETFs slash leverage ETFs that I follow. And then the 5 stocks that made the cut, as you were talking about, that made the cut to get onto my final list of stocks I'll be watching for the week.
Hmm.
And so, that's so. Yeah, if anybody out there has any suggestions on what you do to basically negate the noise of the narrative, drop a note down in the comments, and we would glad to read them out. And so what about those tariffs? They sound scary. They sound old. They sound antiquated. Um, but if they really destroyed the market, why did the S&P 500 hit all-time highs after every trade war?
It's a good question.
And yeah, so I mean, that is a good question, don't you think? Because it was kind of funny to watch all the political, you know, uh, wonks out there saying that, oh, it's going to be terrible. Oh, it's going to drive up inflations and all that kind of stuff. All that speculative about what might happen, and trying to drive up the fear about what might happen. Um, where in reality and historically,
Well, do you
that
think
isn't
that
what.
they're uh, just ignorant of that point?
Who the
The
political
news sources,
news. Oh gosh, that's a.
are they ignorant, or are they trying to stir the pot to just get more eyeballs?
you
Right?
know
Because sometimes, you know what, the truth is boring.
yeah, yeah. It's like the old adage: if it in newspaper writing, if it bleeds, it leads. Right. Um, so I don't know. What do you think? I mean, do you think that they're ignorant, or do you think? I mean, I don't think they're ignorant. Um, anyway, thanks, man. Thank you a lot.
From Karam.
Yeah.
So yeah,
Okay. Answer your own question,
uh,
Mike, and I'll come back to it. Go ahead.
I'd like to.
Yeah.
I like to think the best of people, so I'd like to believe that perhaps it's an ignorance. Um, Unfortunately, yeah, like from what I see, especially in social media, more and more and more uh, are things that are emotionally charged. Everybody in including us too. Like, well, we want to try to get eyeballs and
Oh,
listeners
sure.
and all those kinds of things. Well, how do you do that? Well, you go and you type into a chat GPT and you try to say, well, how do you get more eyeballs? How do you get more listeners? And then you start to see the types of things. And then to me, that, well, when I go and I look now at social media, at the news, and I start to see the types of rhetoric and emotion and
Sure.
all that, it's just like, wow, everybody's just playing a game. Where's the actual news?
Yeah.
Right?
Yeah.
Are they trying to give me news or are they trying to get me to watch?
Well, I think that's a great. I mean, a great thing. And I appreciate your wanting to give people the benefit of the doubt and reading the history. I think that the history on Jesse Livermore, the reminiscence of a stock speculator that was about
Yeah.
he wrote in there and talked about there, and also some of the things you can read about when the old bucket shops, where what used to be the kind of fronts for the brokers who would, and they would do all their trading via telegraph, and the and they invented the ticker tape machine that actually gave you live data across, and it could be put everywhere the telegraph would go. And so those would be in the bucket shops. And what they found was that the emotion that the trading picked up when they installed one of these ticker tape machines in the bucket shop. And when people would start seeing the stuff live and just tick, 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 and they got excited with the noise of the ticker tape machine and all that kind of stuff. And they would become more emotional and make, illogical bets on the market, because that's more or less what they were doing back then. And when the brokers found out that all of a sudden people were making more trades and they were collecting more commissions, they started installing those ticker tape machines in more and more of the bucket shops around the country. And now, did they do that to help traders become better traders? Heavens no. They did it because they wanted to increase their bottom line. As you said earlier, I mean, I know that we are very careful when we do this show, and I know you are with your social media stuff. I am with my social media stuff. We're very careful that we're not putting out clickbait.
Right.
Basically to try. Just can get them to click on it. No, we want to provide something of value, and people who know you and I, they know that we are in a way trying to combat the crap that's out there on like Instagram and all that kind of stuff, and we make every effort possible to, and no, we don't, and we purposely won't lie to people about what it really takes to become a trader,
Mhm.
and the hard work involved and all that type of stuff. And we tell people, we're not the Lamborghini guys, and because my wife would get really ticked off at me if I had a Lamborghini and really cute model hanging around. My wife would not go for that at all.
Mhm.
Since I've been married for 50 years, she would go, "No, I'm sorry, no, the blonde's got to go, and the Lamborghini's got to go." And so, what's
Yeah,
Alberta got to say?
you've got true wealth,
Alberta's got to.
Dennis.
Huh? What's that?
You've got true wealth. Married for 50 years. That's incredible.
I know. And so always have a plan and stick to it, but always have a plan B just in case. Yep. That great advice, Alberto. Love that. So, Alberto, where are you from? Alberto Fernandez. Get ready to change on a dime. So, yeah. Excuse me. So, no, Mike, that's excellent. And did you know, like on things like tariffs, why do governments even? Okay, Spain, awesome. Um, I know you, Alberto, in Spain, but you were living in Great Britain for a while, weren't you? I think so. Anyway, maybe he'll tell us. So, why do governments even think about doing tariffs? Because tariffs have been something that governments have done for a long, long time, Mike. And do you think most people? And I want to circle back to your question, but do you think most people are even realize why uh, people, why governments even look at doing tariffs? And there's a short list. Basically, they do it to protect local businesses.
Hmm.
They also do it as a big stick that we talked about earlier to pressure foreign governments. They want to
Right.
reduce the trade deficit and just political leverage. And I think using tariffs is oftentimes it may seem like a blunt type of instrument, but I also think it's a very sophisticated game on on learning how to do it. And so,
Right.
uh,
It's a bargaining chip.
yeah, it is. And so,
So it's
back
no
on your other
surprise that the guy that wrote The Art of the Deal would come out and try to use it.
I'm shocked. So, hey, Mike, you mentioned, you wanted to have good faith and people would do the right thing and all that kind of stuff. Uh, and I don't know. I don't know if I have. Well, I know I don't have that. I'm not a skeptic or cynical towards other people because I really want to I expect the best from people, but at the same time, I think we have to be aware that at times, there's going to be people who want to take advantage, and
Hmm.
once we have the, if you will, the spiritual discernment that, this
Hmm.
person is up to no good, we need to either one, call that out, but also we want to, I think, avoid them. I mean, because like we've all known, you ever known somebody who was a emotional vampire
Yeah.
who just who would just suck the energy and the out of you, and they always their mantra was just more, more, more. Give me more. Give me more. Give me more. Give me
Hmm.
more. And they wouldn't do a gosh darn thing to actually improve themselves because they thought if they could suck it all out of you, they wouldn't need to improve themselves. I mean,
Hmm.
that may sound blunt, and I've gotten to a point in life, Mike, where I don't care because I'm going to be blunt and call it the way it is. And so those kind of people are the ones to avoid like the plague. Um, so, but what about NAFTA? Okay, NAFTA, did the market crash after NAFTA? And the answer to that is no. There was a fear of job loss. That was what existed. But the markets actually climbed steadily through the 1990s as NAFTA took effect. Well, what about 2002? Uh, Bush's steel tariffs. Did the market collapse? No.
Nope.
Matter of fact, X, which was U.S. Steel, went on and climbed and became, just really, really powerful during that time. I remember that U.S. Steel turned out to be a growth stock during the early 2000s. And then
Mm.
President Trump's China tariffs back in 2018 and 2019. Did the market crash? The answer to that was yes, temporarily. Okay. But there was also a lot of other junk that was going on in that time with the advent of COVID and all that kind of stuff. The market did crash. Initially, S&P dropped 20%, but in late 2018, it had fully recovered and it actually hit new highs in 2019 with that rally. And then we had the flash crash in what 2020 with the COVID, which was
Mhm.
recovered by the end of. So, tariffs cause short-term panic, but the market adapts. I mean, the market has what do they call the market? Really does a really great job of being a discount. It discounts the news,
Right.
and so
Yeah, so
yeah. So where
you
to
need a
from here?
complete system. You need a system to trade. And if you have a system to trade, then it makes all the stuff a lot easier. The
Yeah.
system that I started with came from this book,
Yep. Okay.
right? And derivatives thereof. Then later on, just happen to have it sitting on my desk. Mark's
Yep.
book,
Mike, yeah,
right?
great book. Great book.
So starting to think through how these guys operated, don't have it on my desk, but also Nick Darvis,
Yep.
also Van Tharp in position sizing, and starting to learn more about all these different things. What wasn't on in any of these books, right? What's the Fed doing? And well, tell me about the tariffs, and let's do some broad forecasting, right?
Yes.
So if these guys don't need it, well, why the heck do we? So that's why
Exactly.
it's never even entered my mind for, well, maybe I need to start tuning in and listening to what the Fed has to
Yeah.
say. And
Well, I agree wholeheartedly, and the thing that you said there about, maybe I need to start tuning in. Uh, let me tell you, if you're listening to the financial networks and all that type of thing, listen to Jim Cramer. Not Jim's a really nice guy and all that kind of stuff. But what's Jim out doing? Jim's trying to stir up your emotions and get you going. To get
mm,
and Kathy Wood is another really great one. She is such a promoter of the positions that she gets into and all kind of stuff. She's an influencer, and so what is she trying to do? She's trying to influence the price of the stock to either go up if she's holding it or go down if she wants to buy it. And so, but the thing about it is those influencers like that, while they move the market for a moment,
mhm,
I'll be darned if I'm going to follow them. I want to, that's what I like about the IBD process and also the swing trading process that I've developed is that it's got a long-term track record of success. And
right.
and basically I know if I stick to it, that
Mhm.
that re that s that success will repeat itself over and over and over again, and through the ebbs and flows, and so but yeah, that's awesome that and then there's 2 other books that Mike forgot to mention, and I will mention right now, and it's his book, which is let me get this set up properly. There we go, Trading Mind Will, and then my
Yeah.
book, the Trade Your Way to Freedom. And I tell you, if these aren't in your library, you are missing out dramatically. What's the biggest thing why people should get your book, Mike? Just one
Because
in one sentence.
well, our guest coming on next week highly recommended it on X, so that's why I think that everybody should go buy it.
Okay.
Big endorsement from Christian Flanders, a guy that won second place in the U.S. Investing Championship with a return of 400%.
Yeah.
Love the trading
That
mind wheel.
that's awesome. And for mine, I'll just say that what I share in mine is I share my 4 top setups that I still use every week that have delivered us beating the S&P for 13 years in a row with an average return of about 35%. So are like I said, do we blow it out every year? No, but an average return of 35% over that period of time, it's not a promise, but that's what it has achieved, and it's repeatable. That's what I love about it, a clear, simple
Yes.
way to multiply your account. So, so if the headlines aren't the key to success, what is? The best traders don't trade the news; they trade the price. And Mike already hit on a little bit of that, guys.
Yeah.
Is the real market movers are liquidity, recognize when big money flows, price action, technical levels, and um, earnings growth. And so, Mike, what are some of the other things that traders can be working on to, again, filter out the noise or maybe shut the noise off as much as possible? But then, what piece of the focusing on the process and their own self development will pay dividends for them over the long term? Would
Well,
you?
if they're trying to trade growth stocks, uh, focusing on stocks that have strong relative strength is important. That was something else that I saw Webby mention earlier today, and he was a mentor of mine, and I adopt that strategy too. Stocks that have high relative strength. So we want stocks that are going to be able to outperform the market.
Yeah.
So if you're looking for stocks that can outperform the market, then you want that relative strength line, the line that compares the stock price to the S&P. You want that to be going up because that's showing that the stock is outperforming the market. So if
Right
the
on.
stock is able to outperform the market while the market is moving sideways or even going down, then what's going to happen when the market turns around and starts to go up? It's going to be the leader of the pack.
Right on.
So focus on those kind of stocks.
Yeah. And I think also that those kind of stocks are the ones that when the market is pulling back, they pull back less. And
Yes.
so that's something you can identify. I mean, like the index this today, okay, the index and several other stocks gap down dramatically. So as you're sorting through your, your watch list, well, one, start with a great watch list that's full of strong, fundamentally strong stocks.
Yes.
You want them to be moving. In other words, I can have a strong fundamental stock, but let's say it only moves, let's see, 2 or 3% per week. Well, 2 or 3% movement per week on average is not what I'm looking for. I want to see a stock that's moving on average 10% a week.
Right.
And that type of stuff. And what that does for me, that allows me, I know then I can get into that stock and pick up a quick 10, 15%. 10% is my initial target. And it's not going to take me forever. It's not going to stall out. And so that's one of the other things that I look for. What about in the mindset area, Mike? What are some of the things a person could practice just to improve their mindset in the way they approach the trading?
Oh, well, you want to have a routine. I think
Okay.
that having a routine, having a trading routine is important. So when you go and you approach the market, like let's say that I'm walking through my door, I'm going to sit down at my desk, turn on the computer. I want to have a plan for what I'm going to do and how I'm going to respond before I even turn the computer on in the morning.
Right on.
So
Do you yeah, go ahead.
yeah, no.
I have
So I was
I have
going to
another
say, well,
question for you. What?
yeah. So I was just going to say, well, when is the best time to come up with those kind of plans? Is it when you roll out of bed and you've got your cup of coffee and now you're caffeinated and you turn things on? For me, no. For me, I like to have all the planning done the night before.
Right
Right.
on.
So,
Right on.
when the market's closed, when it's nice and quiet and I'm able to be objective, then when I do come on and I turn on the computer, I've already been up for a few hours. I've already gone to the gym. I've already prayed. I've already done. I've had breakfast with the family. I'm calm, cool,
Right.
collected. And then I'm able to go in and see. Well, here's what my plan is, and all I have to do is go and execute. And it makes it a lot simpler, a lot calmer,
I,
fairly stress free.
I love that. In Mark Douglas's book, Trading the Zone, he talks specifically about questions to ask yourself in the morning. And he suggests asking those questions out loud. And one of the questions he suggests asking first thing in the morning is ask yourself, am I ready to give myself money today? And if the answer is no, he says, don't turn on your computer. Just don't. Don't even trade because you're not ready to rock and roll. But I agree with everything you just highlighted, and that it's one of the. And I would like to add to it is I really believe that take your plan and speak your plan out loud so that you hear it. There's something that just happens with your and maybe you don't want to do it out loud, so whisper it to yourself, but make sure you're not just doing it silently. There's something that happens in the brain to make the connections even stronger and better of developing a strong habit. if your brain hears you speaking it out. And
Hmm.
it is true. And that's been something that is just from ancient times. Remember, like when the Hebrews came out of into the promised land, or they came out of Egypt. Uh, God told them, said, speak these stories to your children of how you were saved, how you were brought out. And yeah, spoken of for affirmations. You're right on, Alberto. Uh, and and it was really interesting during the generations where they did that and made it where they would do it over and over again. Those next generations seemed to do well because they carried an extra, something extra in their brain. But when they stopped speaking out and reminding themselves of what God had done for them,
Hmm.
what happened was they forgot about God, and then the decline of their civilization started. It's really
Mm.
crazy. Mm.
All
So
right. So then for part-time traders out there that are doing most of their planning at night on the weekend, great. Then this is your mantra for when you're in the morning. Review the plan, trade the plan. Review the plan, trade
I
the
love
plan.
it.
That way you're getting the plan in your mind first. And then all you have to do from there, trade the plan. Review the plan, trade the plan. Review the plan, trade the plan.
I love it. Repeat after us. And it's okay. You may feel silly because you may be a quiet person. Like I'm kind of a quiet person, and you may feel silly doing it for the first few times, but it's okay. Maybe part of it is just write it down on paper first, and then say it in a whisper. But
Mhm.
just commit to do it and get a little bit louder, get a little bit louder, get a little bit louder until you're getting up in the morning and you walk into the mirror. Actually, take a sticky note and stick it on your mirror when you get up in the morning. Wash your face, and you see there. It's basically, what did you say? Review the plans. What was you going to
Review
say
the
again, Mike?
plan, trade the plan.
Review the
Review the
plan, trade the
plan,
plan.
trade the
But
plan.
say it right to yourself, looking yourself in the eye. Today I will, and say, I will review the plan and trade the plan. That's beautiful, man. I think people should send us money for that. That's how good that is.
Charged by the letter, we get paid more that way.
Anyway, so hey, let's take a look. So how do you become an expert at technical analysis? Well, one, we keep it simple. And I'm basically gonna break away to a chart right now and kind of show
Right.
you a couple of things that I like to do um, on my charts. Let's see.
All right, great.
I'm already, let's see. There we are. Okay. And I'm going to put us on this. Where do I want us? I want to put us right there, but in a little bit smaller version.
What are we
There we
looking at there?
go.
Tesla?
Or maybe a little bit larger. Okay. Here's a chart of Tesla. And the thing that you have to understand is Tesla is a perfect example of a stock that runs nicely. This is a weekly chart, and
Mhm.
I suggest utilizing a weekly chart for this exercise because uh, uh, the uh, the weekly chart identifies stronger levels of what I call they define the higher probability zones or
Mhm.
emotion zones where you can sit there and go, okay, something's going to happen here, and you can be pretty accurate on determining that. Let's take a
Mhm.
look at a couple of these, and what's going on at these zones is I want you to be able to understand the psychology and mindset that is present on the chart. Now,
Okay.
and so we'll start over here. And as you see, we broke out here and ran up very nicely and then did a reversal and then pulled back. Now, a lot of people will sit there and they'll go, oh, well, I missed this. And so they
Mhm.
start buying. And so there are some people who bought right there. We'll come back to that momentarily. So if they bought the high, and then we get a
Mhm.
big sell off, right? The sell off. Well, Look where it sells off to, which is very interesting. Let's draw a straight line across here. Oh, there is a strong amount of demand for these
Mhm.
for the shares of Tesla right down here because not everybody who wanted to buy here actually bought. And so you can actually define where this level is, and I'm going to call this a high probability zone. You can define where that high probability zone, and it is a zone of prices,
Mhm.
where the prices on this sell-off are probably going to stop. So that's one of my high probability zones. And some traders literally will lay in when your prices are up here, they will
Right.
lay in a buy order to buy some down here. And just let that buy order click out. And sometimes they get filled, sometimes they don't. But that's a high probability area because where's your risk? Your risk is just slightly below this area here. And
Yeah,
so
that's a good question. I was gonna say, how do you determine where the end of the zone is?
well, if we blow that up just a little bit, Mike, let me go ahead and get out of that and out of that. Let me see if I can run this over a little bit. And so I'm going to blow this up a little bit right here and see if we can do that. Yeah, that'll work pretty well. Now,
Yeah.
what's
And what
interesting,
platform are you using, by the way?
what's that?
What platform are you using, by the way?
I'm using Thinkorswim.
Thinkorswim. Okay.
Yeah. And so let's expand. Whoop, we don't want to expand it too much. But as you'll notice, this little level here, I always encourage people, look to your left. Look to your left. And the fact of the matter is if I look to my left back to here, guess
Mhm.
what? There was another level where that was finally broken out of. And so there is a reversal of polarity that takes place,
Mhm.
that this level of resistance, as soon as it's broken, becomes a level of support. Now, again, when I define it as a level, that's exactly what it's a zone. It's a zone. And if I can help encourage people to think about that from the perspective of it's a price zone, not a price point, it will help you out dramatically when you. So my range here, Mike, what I'll do is here's my zone. I'm just going to go and
Okay.
grab the high here
Okay.
down to the low and approximately there. And then I'm going to stretch that across. I'm going to make sure that, so there's my little zone. Now I knew, dadgummit. Okay. I can draw that zone in there as soon as I make my breakout. And so as time, if price goes along, I'm going, okay, pal, I hit my high, got the reversal. Where's it likely to go? Well, it's likely to go. There's a strong potential for it to get all the way down to there. It did. Hit the top of the zone, hammer, momentum's just about to shift, and I have a hammer followed by a bullish engulfing. That's my buy point. So again, or I can float a conditional order down here, let's say at 24.25, and I could have bought it right there. Where would my stop loss be? Well, my stop loss would be just slightly below that, or I've been using here lately the APTR. That's the average true range, but it's a percentage to establish my stop loss. So then,
Mhm.
then time goes on, right? Time goes on.
Okay.
Now, remember what happened up here. There were people who bought, and they were, the people who bought up here were very sad because it immediately reversed on them. And their emotion was a fall, and it fell. Guys, that's a 62% drop on the
Jeez.
weekly chart. So, they're not happy. And so, according to Wyckoff, here is where there is a lot of not demand, but supply. Demand to buy here, supply to sell up here. Look to your left and look what happens on a weekly basis. It gets right up there into the zone. And here's the zone again. Just cover that really quickly. I go to my high, go to about that low right there and just bop it across. And there's my zone. And prices got all the way up there, stopped dead in the water. And a lot of people go, well, they don't recognize those zones because they don't look to the left. Now we drive on out a little bit and you see it breaks out. But if you'll notice, every time it breaks out, it will come back and retest. And so if you'll just learn how to do that. Now, what are some of the other things I'm taking into consideration with this? Is one, what is my trend? And by the time we get over here, we have higher highs, higher lows. And so I know my trend is that way. I'm above all my moving averages. So I know my trend is that way. So it's telling me that, well, I just need to wait until I pull back down into a high probability zone or a high, emotion zone. And that's where I can either put my buy triggers or my sell triggers. And so in a situation like this, if I would have bought down here, I want to be taking profit up, as it approaches this zone up here. And there's no question to ask about that, because I know that there's a high probability this is where prices are going to reverse. Now, when it breaks out, that's telling me that this zone here, let me get that color. That tells me that this zone has been broken once it's broken out. And so it may come back later, but for now, that is the zone I do not have to worry about. So if you just learn how to identify the zones, you will become a better a long-term trader. And let me show you what this looks like, because I want to take it from my weekly chart. I want to take that over to my daily chart. Maybe. Oh, there we go. There we go. Pow. So there's and so let's go just back a little bit. And let's run it back a little bit till we find those. When was that? This is, okay, 520. And I encourage you to go through, there we go. There we go. Now here's the time period when we were getting this. And as you can see, it gets back to being a good Boy Scout. Be patient, be prepared. And as you can see, this congestion zone over here was a consolidation zone. It broke out from that, but you can draw that across your zones up here. Yeah, these were giving you all these clues about, I reached back up into this level here, fell off. And then over here, when it came back up to this level and sold off, that was telling you, okay, this rally's over for the time being. Now, how much of a run was that? Let's say I did pick it up right at the top of the zone. Well, that little run right there was about 130% over 41 days.
Not bad.
Not bad at all. And so if I would have hung on to that, I would have probably, fight the mental side, if you will, fight the mental side, because the mental side's when you hit that high up here, you get the mental side, or the greed side is going to be telling you, I'm going to hang on because it's going to the moon, Alice. I mean, it's going out of sight. But the fact of the matter is that's where the conditioning, that's where the plan, that's why the recognition of when you hit this level up here, what is the highest probability, what is the most likely thing to happen? Or what is the path of least resistance? And it's
Right.
probably and so think through that, ponder it, write it down, and it works both ways. Zooming up, and then also on the flip side of that, let me see if I can find one. Yeah, let's go
Mhm.
back one. And what it
Mhm.
does also, it works on the flip side of that. It's when things start to break apart to the downside. Again, big buyers up here thinking, oh, we're going to rally on up. But then we started selling off again. And then as soon as it breaks down, there's a zone of
Mm.
here's your zone. Okay. You can call that your supply zone. And as you can see, prices pushed their way up towards the supply zone, never made it up into it, and then broke down from there. And oftentimes, what you'll see is there's another demand zone because this is where the buyers came in last time. And look what happens. Okay. It draw that up there. Whoops, come on. There we go. Demand zone over here. Look at how it stalls right here before it falls down more. And so, you know, not a bad place to take a buy. The only problem is all my moving averages are now pointing down. So I'm not want to trade against we don't want to trade against the decline and all the trend. So
Yeah,
if
great
you
point.
will just learn those very few approaches and look to the left, start with a weekly chart, define your strongest levels of high probability zones, and then explain and then think about it. What's going on here? What's going on here in the minds and the actions of the traders who are particularly trading that? If you want to have more information about that, you can go check out Wyckoff. He does some really, he did a lot of research in this area, and it's really crazy. So anyway, that's what I wanted to share with everybody, Mike.
No, great stuff as always, Dennis. Thank you.
And so
Yeah,
let's
I'm learning stuff right along with everybody else. But what I would also add to that too, to add to your point, is that if you don't have a plan, then that's when emotions will take over because something has to be the decision maker. So what's going to decide your emotions, and that's when fear and greed and hope start to come in. If you have a plan, then the decision maker is the plan,
exactly.
and all you
Yeah.
have to do is follow that.
Yep. Yep. So do you put in your order? Okay. Do you put in the majority of your orders to your buy orders outside of live market times?
Most of them, yeah. Most of
Okay.
the times I'm operating off of working orders, placing buy stops, but I'll use a buy stop limit order so that way, say price gaps up 10%. I don't want to buy up 10% because then all of a sudden my ratios are out of whack.
Yeah. Yeah.
So,
Yeah.
so I want to buy up to a limit, which is typically about 1% above wherever my trigger is. But
Okay.
there are times where I'll set an alert on some trades, and I want to see how it's moving before I go and I buy the trade. Let's say that I'm looking at a momentum based trade that maybe doesn't have the full support area, that full
Sure.
zone that you have, but it does have a lot of momentum. It's a leader in its industry group. The market's hot, and it has a variety of other things, but it doesn't have that bottom piece. Well, I
Right.
might still be interested in it, so I'll place an alert to see, well, how is this thing developing as it crosses that threshold? And if it's doing so in a good way, then I'll take action. And I already write out, well, here's the actions that I'll take if these other conditions are met.
Okay. Cool. Yeah. And that's kind of what we do also. What I do is and I'll show you a trick. You trade a think or swim platform, right?
Uh, I use Thinkorswim as my broker, but I don't keep it on at all during the day. I only open it up when I'm placing an order.
Oh,
I'll
well,
do
that's what I
all
mean.
of my chart analysis and everything in trading view, and I'll
Right.
do all my screening in deep view.
but you do use Thinkorswim to place your orders.
Yes.
And I'll show you a trick one of these days on what we do to where you could actually put in the order you just talked about anytime. And you're gonna and it'll be protected against gaps.
Oh, yeah?
And really, really a cool process that we've been using. So
Oh,
um
yeah.
and and I'll share it
Tune in
just
next time, folks.
no. This is part of the autopilot premium service, and but you know you and I share information back and forth, and so I'll be glad to share it with you.
All right.
But it's something that I've been working on because I use conditional orders, I use OCO orders all the
Mhm.
time, and they work exceptionally well. So guys, you know, I encourage you, you know, please don't miss any week's episode. uh, you know, whether you're following Mike, following me, following both of us, we look forward to hearing from you. You know, do us a solid, and if there's somebody you want us to talk to and have on, like if anybody knows Mike Webster, you know, we're going to invite Webby to come on. And so, Webby, if you're listening, Mike and I would love to have you on, um, and several others that are out there. You know, several other great traders that can help you become a great trader. But you know what? In order for you to become a great trader, you have to start focusing on your system, your process, and applying it. And then not the results, but on applying your process. That's how you grow into becoming a great trader like Mike Lamothe.
Thank you very much, Dennis, and you as well.
And so,
You as well. Learned plenty from you through the years.
so Vibha Alberto, I can totally not pronounce that, but is he? Do you recognize that name, Mike?
No, I'm gonna look that up as soon as the show's done.
Okay. So with that, we'll say aloha and God bless everybody. I hope you got something out of today. And again, please share this information with other traders, because we're going to tackle another huge trading myth next week, and could change your trading forever. So aloha, God bless. She
All right.
has been okay. Excellent. See you guys.